Thank you so much for coming tonight, Jack. I really appreciate it. And I'm so excited about you being here because I know that you have a very strong focus on the blockchain, and obviously I have an interest in FinTech areas and domain. I was wondering if you could tell me the story of how you got involved and why you decided to become an investor in this area.
Yeah, so I found out about Bitcoin back in 2013, and I kind of wrote it off like most people when they first hear about it, just some virtual currency out there on the internet, nothing really special. And then shortly after, I was about to get into wealth management, and so I was in New York, and I was going through the interview process, and someone told me about the blockchain and the underlying technology of Bitcoin, and they used this example for smart contracts, which are self-executing code. And he said, you can do a smart will with this. So upon event death, I can move $10,000 from my account to your account on the first of every month until the account is depleted. No lawyers, no accountants, no nothing. I was like, wow, no accountants, no lawyers, no nothing. That's incredible. Just what I want to happen is going to be executed by code. That's really impressive. So the next morning, I had an informational interview with a venture capitalist. I didn't know much about venture capital at the time. And what he said that really resonated with me was that if you start a business, and I invest in you, you hire good people, you contribute to the economy, and only if you're successful am I successful. And that really resonated. You really need to create real value for the economy and for the world in order to actually be successful. So I put two and two together. I said the blockchain is really unique. I don't know enough about it yet, but I can just tell that this is going to be something really big. And based on my conversation about venture capital, I thought that would be the best way for me to add value. So I called my friend that I was about to sign a lease with in New York, and I said, hey, I'm really sorry, but I've got to move out west. So 2 weeks later, I went out west and I came through an entrepreneurship program, Draper University, and that was really my introduction. And I spent the next year and a half working there and at a fund and really learning about the intricacies of the industry. And then I met my co-founder, and he had access to some capital in an emerging market that really wanted to bring the technology in. So him and I paired up, really dove into the blockchain and its potential, and we realized that technology is going to enable emerging markets to create a middle class. It's going to be the first time people have an identity, the first time people can actually prove that they own their land, the first time that they have their financial, not just financial inclusion through having a bank account, but access to other asset classes. And so we started looking at it and saying, okay, if we were to execute and bring this technology into emerging markets, how would we do it? So we started day one investments to fund the companies that wanted to start solving these problems. And we started day one consulting as a way to create a bridge from Silicon Valley to these emerging markets, starting in Papua New Guinea, because that's where my co-founder's from.
And so what kind of companies have you invested in so far, and what are you looking to invest in?
Yeah, so we're really, we shaped our thesis once we started looking at the technical challenges of the blockchain. When you first get into it, it's really obvious to see the potential of the technology. But we started shaping the thesis when we saw the limitations, and so we're being very selective. One of the challenges that we're seeing is that there's not a lot of technical talent, and there's not a lot of strong entrepreneurs in the ecosystem yet. So there's a lot of people developing solutions for other blockchain enthusiasts, and there's a lot of people running proof of concepts within large organizations. So what we're doing is we're going to kind of backload a lot of the investments into year 3, 4, and 5 of the fund in order to wait for that talent to come in, because you're solving really big problems in big industries such as insurance, finance, healthcare, gov tech, et cetera. And so it's not as though, let me rephrase that. The chances of success are better when someone's coming from industry and has the connections to execute and bring the people together. So we're going to be backloading a lot of our investments into that year 3, 4, and 5.
And how do you see the future of where we're going and what's going to happen as regards the changes that FinTech and blockchain will make?
So I think that the blockchain is going to create a lot of efficiencies within the financial industry. But I think we're a few years out because the technology doesn't have the ability to scale yet. So the Bitcoin network can only operate about 7 transactions per second. Visa does hundreds of thousands of transactions per second, right? So we think that this technology is really going to take hold in emerging markets where they don't have the same volume. So the scale of the technology, the volume of transactions is more proportionate to the scale of the technology. But it's going to create efficiencies where there's trusted third parties. So right now, the reason why Bitcoin really took hold was because if I want to move money from my account to your account, my bank and your bank have different databases. So they have a ledger. There's a middle person that I have to send them, that the money gets sent through, a clearinghouse, and then it gets sent to yours, and they have to reconcile all the ways back through. So that's a trusted third party that is needed in the middle of that transaction. I think that it's going to disintermediate a lot of those trusted third parties to create the efficiencies to allow banks to talk directly to each other and share information that way.
So do you think banks will ever get to the point where they'll actually use a common blockchain? Because that seems to be quite an issue that everyone discusses. They say that they'll never do that because they want to keep their information private. But obviously the only way it could really work is if it was a common blockchain, right?
Yeah, so they're working on solutions that enable the transactions to be communicated between the two parties and unknown to everyone else on the network. So it's not as though, JP Morgan and Chase and Bank of America are all going to use the Bitcoin blockchain. What they're working on is called the permission blockchain, where they have their own blockchain operating amongst themselves, and you have to be a known entity to be a validator on the network, and you have to be a known individual to interact with it because you have to be someone that they're working with. So R3 is really pushing a lot forward. They brought all the major institutions together. The challenge with them is that there's a lot of cooks in the kitchen. There's a lot of people with special interest, and they have their own vision for what they want it to be, and they're working together well, but it's a little challenging. They will ultimately come together under one blockchain because that's where the efficiency is. It's not under having the intellectual property and owning the technology and allowing that to be your own. And I think that's kind of the MO of the banks that has been. And what they realized is that they were able to move very fast by themselves. And now if they want to go further, they have to start working together. And this technology is the perfect to enable that.
It's really amazing to be in the midst of this because it's such a change, and everyone has to let go of the old systems and the old way of seeing things. But as you said, it's the only way that we can really advance and have things more efficient and more transparent, right?
Yeah, and so the transparency doesn't even need to be outward, right? Like it doesn't, like I, Jack Saba, don't need to know what's going on between Bank of America and JP Morgan. But the auditors do, the regulators do, right? And so if they have a permission blockchain where the regulators can see what's going on, they could audit the network to understand how much leverage the banks are having in a given position and adjust the rates with it. So now you're gonna have more efficient markets too. So it's gonna enable these different solutions that we've never seen. So right now after 2008, regulations came in and now banks have to hold more collateral for their positions, right? Because we're unsure of what's going on within the industry, so you need to have more on the back end. This could reduce that by creating transparency. Transparency will reduce the risk of the positions that they're holding, and then it'll create more efficiency within the marketplace.
So exciting, and thank you so much for sharing all of this. It's really got me excited even more, and I appreciate you coming for I think the VC chat's going to be fantastic. Thank you so much.
Yeah, thank you very much. Excited to be here.